In my last video, I discovered one of the most intense loopholes or scams, or whatever you call it, in the insurance industry here in Florida. They could literally take down the entire housing market. If you guys haven't seen that video, I'll link it up here, but don't go there until the end of this video, because if you miss just 1 minute of this, I'm telling you guys, you're going to be very sorry, because this could literally cost you guys thousands of dollars, even if you're not affected by the hurricane. So let me get started just like this. The scam goes exactly in this manner. It's 3 o'clock in the afternoon. Someone knocks at your door and you open it up, and it's a contractor. Now, the contractor is offering you a free roofing inspection, and he's doing it for everyone in the neighborhood, and it's not going to cost you a penny. You know, you have a couple years on the roof, and maybe it was put on before you owned the place, and maybe you're curious. So the roofer goes up on the roof, checks it out, comes back and tells you your roof needs to be completely replaced because it's dangerous and it's not in good shape. So you obviously say, no, I don't want to pay for this because I don't think I need it. And then the contractor tells you not to worry because your insurance company will cover the whole thing and you won't have to pay for a dime. And on top of that, he'll even communicate with the insurance company on your behalf, so it doesn't even inconvenience you. All you have to do is just sit back and wait for your roof to be replaced, right? Sounds too good to be true. Well, it is too good to be true, because what happens is the contractor, he will simply just give you a tablet, have you sign, and then when he walks away, he's now walked away with your rights as the homeowner to collect the insurance money. So the contractor then goes back and files a claim with your insurance company, and they either pay it or they don't. If they don't pay, then the contractor will team up with one of his attorney buddies, and they'll file a legal claim, a lawsuit against the insurance company on your behalf without you even being a participant in it. Now, when that happens, the insurance company will just quickly pay out the settlement because it would cost them more to actually fight it than it would to actually make them go away. So you think to yourself, okay, well, at least I'm going to get a free roof out of it. Well, only the lucky few actually get the roofing job done, because a lot of scammers out there, the contractors that do these things, they actually keep the money and they never even do the work. What they'll do is they'll target a neighborhood where one roofing job actually gets completed, but nobody else's roofing job gets completed, because they just use the one roofing job to kind of get validity in the neighborhood, and so people can see that they actually do good work, but then no one else gets their job done. So that's one of the biggest frauds that has actually accounted for many insurance companies in Florida going completely out of business, going bankrupt in the last few years. Now, for an insurance company to go bankrupt is very difficult, guys, because insurance companies make a lot of money. They're basically selling you air, right? And if you ever heard of the story of Warren Buffett, he made most of his fortune when he started investing in insurance companies. So for insurance companies to go out of business, something ain't right here, right? So you're thinking to yourself, all right, well, this scam has many players, but the biggest problem here is the contractor, right? Well, not exactly. You would be wrong if you thought that. The biggest culprit behind this whole scheme is actually the attorneys. All right, so I know I'm going to get a ton of slack on this video, and I'm probably going to get a lot of hateful comments down below. And just wait till the end, because I will make my point. Now, attorneys are the biggest culprits in this whole scheme, because in normal terms, when you want to work with an attorney because you want to sue your insurance company or you need a legal representation, you give your attorney what's called a retainer. Now, a retainer is a lump sum of money which the attorney will draw from as he's working as many hours as it takes to represent you in your case. But some people don't have this money in order to get representation, and attorneys will accept what's called a contingency fee. Now, contingency fee basically means that you don't pay anything up front, but in the event that you do win, then the attorney will get paid out. Now, the problem with this is that back in 2015, a couple by the name of William and Judith Joyce actually filed a lawsuit against their insurance company because they did not want to pay out a claim. So they hired an attorney, and then the attorney went ahead and also sued the insurance company to try to get their claim paid out. When the insurance company reviewed the information, they initially said that the couple had failed to disclose 2 previous claims that they had made to other insurance carriers. When he brought this to court, they found out and discovered that the actual claims were disclosed initially when they first made their application to the insurance company. So it was an open and shut case, and the insurance company had to pay the Joyces out $23,500. So you would think this is a happy ending to the story. But what happened in this trial is that the attorney that represented the Joyces actually made out with $38,000, which seems like, hey, how is the attorney making more money than the actual homeowner? Well, if you have enough billable hours, you're allowed to charge what's called the lodestar method, which means you have billable hours times the amount of hours you worked on a case, and that's how much you get paid out. But in certain rare and exceptional cases, you're allowed to use what's called a fee multiplier, which allows attorneys to use anywhere between 1.5 to 3 times the amount that they normally charge for a case for these rare and exceptional cases. So what is a rare and exceptional case? Well, a rare and exceptional case is a case in which the plaintiff or the person that's going to sue the insurance company doesn't have the money to hire an attorney, number one. Nobody wants to take on their case because it's so low chance of you winning. And you really have to have a situation where the court actually says that it's rare and exceptional. The trial court has to rule that, not just a local district court. But in this case, the local district court awarded the attorney for the plaintiffs a 2x multiplier, which means that the attorney walked away with $76,000. Meanwhile, the Joyces walked away with $23,000. Now, the reason I'm telling you this story is because ever since 2017, when this ruling came out, well, that opened up the floodgates for all insurance companies to get sued by the attorneys in Florida. So why is this becoming a problem now? Well, it's becoming a huge problem because if you haven't noticed, even before Hurricane Ian arrived, you started to see all of these attorney ads popping up on TV, newspapers, radio. I've even seen social media influencers actually being sponsored by injury attorneys and insurance attorneys. It's getting crazy, right? So the reason why I'm telling you this is because there's going to be a huge, massive payday for attorneys because of Hurricane Ian. This may sound like good news for attorneys, but it's definitely bad news for insurance carriers because a lot of insurance carriers have already gone out of business because of these frivolous claims, or maybe not frivolous claims, but these frivolous payouts to just attorneys as opposed to getting payouts to the people who actually been affected. As a matter of fact, since that case actually took precedent back in 2017, there have been some even bigger, more ridiculous payouts since then. And I'll put them up on the screen so that way you guys can see them. It's expected that the insurance industry is going to literally collapse here in Florida, and everyone is going to rush to the insurer of last resort, which is Citizens Insurance Company. If you've never heard of it before, it's literally two insurance companies that came together back in 2002 in order for people to have an insurance carrier that would actually take them if they were declined by every other insurer in the state. It was a nonprofit, and it's also backed by the state of Florida. And the reason why you need to know about Citizens Insurance Company is because that may be the last and only insurance company that will even take you if you're a Floridian. Now, it doesn't even stop there because it's going to get a lot uglier. So let me explain to you what I mean. You see, if Citizens Insurance Company doesn't have enough money to pay out claims, well, they have solutions. As of right now, they say they have enough money, they're funded, and they won't have any issues paying everything out without assessing what's called an assessment. Now, an assessment, some of you may have heard the word before, means a one-time lump sum that you have to pay in order to continue using something, right? If you live in a condo, a special assessment is a one-time fee you might have to pay to do a new irrigation system for the community. Well, in an insurance policy, it's basically something that's going to be keeping this insurance company afloat. Now, they're able to actually increase your policy by 45% as an assessment if they are short on funds. And if that's not enough, then they're able to increase everyone's insurance policy in the entire state by 2%, even if you're not with Citizens Insurance Company. Isn't that crazy? That's because it's a state-backed insurer. Now, if that's still not enough, right? Listen to this. If that's still not enough, then they are allowed to increase your premium 30% for many years, many ongoing years until they can reach equilibrium. Even your auto policy they can increase. Now, that is just nuts, guys. That's incredible, because what happens if another hurricane comes next year and another hurricane comes the year after that? Are they just going to keep compounding and compounding? There has to be a better solution than this, and there is. Before we talk about any of the solutions, let's talk about some of the consequences that we're going to see because of this insurance fallout. Well, number one, we're going to see people who are actually not going to be paid out as much money from their insurance companies or any money at all, because to be honest with you, only 18% of people here in Florida actually have flood insurance coverage. And that's going to be the number one lawsuit that's going to be filed against insurance companies, which is going to be, was it wind damage or was it flooding damage? And that's going to cost billions of dollars. So what will happen is that people may get paid out some money, or they may not get paid out anything at all, which is going to cause them to maybe not be able to even fix their home, abandon their homes, or even lose their homes to foreclosure, because the mortgage payments don't stop just because your home was flooded out. So we may see a lot more inventory come on the market because of that. But the other unintended consequence that could come out of this is that, let's just say that people scrape together enough money to rebuild their home. Maybe they get some money from the insurance, maybe FEMA kicks them out some money, and keep in mind, FEMA doesn't pay out that much. FEMA tends to pay out maximum, somewhere around $10,000 in these disaster situations. So don't count on FEMA to bail you out completely. But if the person does rebuild, what's going to happen is that their insurance is going to go up so much that they may not even afford to live in the house anyway. So they'll probably end up selling it, which is going to cause the market to drop even more because you're going to have all these dilapidated homes and so much inventory. So it could crash markets. This whole insurance debacle could literally bring down the real estate market here in Florida. Now, the problem that I'm seeing is that this problem has gone on too long. But now lawmakers are actually introducing a bill that will actually make this fee multiplier that attorneys have been using for so many years, it would make it only used in certain rare and exceptional cases, the way it was intended to be used in the very beginning. Now, if you're the type of person that is standing by the sideline because you want to wait to see how the chips settle, well, you're probably amongst a lot of people out there. And if you're thinking about learning how to invest in real estate because this could be a huge opportunity, well, I encourage you guys to look at the link down below because our real estate program will be out very soon. And if you sign up early, you'll get a 30% discount. So prepare yourself because there is going to be a wave of homes that are going to hit the market. Home prices largely are dictated by how much a person can afford in a certain area. So as the insurance prices go up, home prices also have to come down, and as interest rates continue to climb up as well, that puts even more pressure to what homes are going to be selling for. So if you guys find yourself in this situation, you might want to prepare yourself. And how do you prepare yourself? Well, if you're a home seller and you've been on the fence for the last few months or maybe years about selling your home, it might be a good time before things get even uglier. Or if you're thinking of buying a home, you might want to start putting money away because there is going to be an opportunity. Or if you're an investor and you're always looking for new properties, well, you're probably going to want to watch this video over here where I show you guys how you can buy pre-foreclosure properties before they get sold at auction. I'll see you guys over there in just a few seconds. Thank you guys for watching. I love you, and I will see you next time.